Thanks for coming back to another episode of Pitch It, a fintech conversation amongst founders, investors, and friends. I'm your host, Todd Anderson, Chief Content Officer at Fintech Nexus. And what we do is we take a peek behind the curtain. What motivates someone to start a company? How do investors make the right bet? What do accelerators do during and help enabling the process of growing your company? How do banks think of founders? Not to mention, we try to have some fun, and what you'll see is we'll also do some special episodes. We have some new features coming. So stick with us, and you'll get all you'll need to know about the fintech startup landscape. Pitch It is really a part of a larger podcast network here at Fintech Nexus. You can go to my colleague Peter, our co-founder and chairman, for Fintech One-on-One. You can subscribe to his feed, or we have our newest podcast by one of our writers, Isabel Castro, the Fintech Coffee Break. For everything produced by Fintech Nexus, you can check out Fintech Nexus Podcast, which is really our content fire hose. All shows, webinar replays, even in-person event content, not to mention our weekly news show. As always, we hope that you rate the show and write a review. I try to really take listener feedback seriously, and as it helps make the show better. You can also follow the podcast and all of our podcasts on the feed of your choice, whether it be Apple, Spotify, wherever you like to listen, or come directly to news.fintechnexus.com. Now, let's get on with the show. On today's show, I'm joined by Dani Pensack, co-founder and CEO of Rightfoot. Rightfoot enables developers to add debt repayment to any application. You know, founding stories are always unique in some way, but I think Dani and Rightfoot take the cake on the most interesting founding story to date. Dani and her co-founders moved into a retirement home to test out their initial idea, which was having high school kids make money by teaching the retirees technical tasks such as coding and other online tasks that they'd ultimately would then pay the high schoolers for. They put that money that they're being paid into a 529 account, and when they got to the point of going to college, they'd be able to access the 529 account. While that initial idea didn't pan out, it did ultimately lead to what Rightfoot is currently doing, which is the APIs to add debt repayment to applications. And really, it's just a fascinating view about how founders think differently and how they look and deal with problems. And I must say, Dani might be arguably the most resourceful founder I've met just far. And as you go through the episode, you'll hear a story about a vacation and her time spent in a van on that vacation. Dani and I also talked about the core problems associated with debt repayment, the impact that debt has on households, in particular households of those underrepresented groups, whether it be women, minorities. It impacts them significantly more than it does other households. Her time in Southeast Asia, raising capital, and much, much more. Before we get to the episode with Dani, if you want to sponsor an episode, come on as a guest, or sponsor one of our many digital or in-person offerings, feel free to reach out anytime at Todd, T-O-D-D, at fintechnexus.com. Now, without further ado, here's the episode with Dani Pensack, co-founder and CEO of Rightfoot. I hope you enjoy our conversation. Welcome to the podcast, Danielle. How are you?
Hi, I'm doing great. How are you?
I'm doing well. Thanks for giving us a few minutes of your time. I'd like to kick off. Tell the audience, tell me a little bit about yourself and kind of what's been your journey, before helping to co-found your current venture, which is Rightfoot.
Awesome. Yep. So I'm Dani Pensack. I am a co-founder and CEO of Rightfoot. Before Rightfoot, I was actually first in Southeast Asia for 4 years. So I worked at IBM out there in tech consulting,
Wow.
and I moved out there after undergrad. So I had an awesome time. I was based in Singapore, but then my projects were in the Philippines and Thailand as well. And I learned a lot about APIs, which is very relevant to the business that I'm running today. And then I went to Stanford's MBA program where I met my co-founder.
And so, I always like to ask the question, um, there's basically two ways, or at least that I've discovered thus far, of why people start companies. Either they've been on that path and have kind of been entrepreneurial by nature, or throughout their schooling or throughout their career, they found, wow, there's a problem I keep on running into, but nobody solved it to date. And I think it's about time that I give that a try. So, kind of, where do you fall on that? Is it you've kind of always had that bug, or did you notice some things, throughout the time in Southeast Asia, or other steps that you might have been at that, kind of see this issue pop up?
Yeah, I think that's a great question. And I definitely say a little bit of both in terms of my background. So, my dad had always started his own companies. So, at a young age, I was always kind of helping out, with his business out of the garage and doing everything from like mailing letters or doing invoicing and accounting for the company when I was in, middle school and high school. And my mom also started her own business too. So, I'd say I've definitely been around that type of environment of being self-starters, but I'd also say you have to be a little bit probably psycho to start a company, have a lot of confidence, and
I'm
then be like
sure.
crazy just going for it. Because when you think about it, it's not, rational at all to say, let's just go do this. I could be making, a lot more money if I was just working at a bigger company, but you have some sort of drive, you have the energy, you see a problem that you're excited about, and you just kind of go for it and don't look back.
So ultimately, where did the idea for Right Foot come from? And when answering that, um, how'd you come to the name Right Foot?
Good question. So, when we were at Stanford, so I met my co-founder Deirdre there, and we were originally focusing on the problem of how we could help enroll more people into college, specifically lower and middle income folks. And we had this really wacky idea about thinking that, all of these high schoolers have a lot of skills that they're good at. Namely, they're really great at tech. They could, teach someone something about a computer, or developing some sort of program, or helping someone write on Facebook, for example. Specifically, senior citizens was, in our mind, a connection that would really be a great exchange there. And we thought that we could help these high schoolers earn a lot of money if they could teach these skills to senior citizens. And then the idea was that we would put all of that money into a 529 college savings account for this kid, and that they would be far more likely to enroll in school. And so the summer between our MBA 1 and 2 years, we actually lived in a retirement home to test out this idea. And it was absolutely wild. We had made a list of every single retirement home in the Bay Area. I called probably 150 different retirement homes, and I said, hey, I don't have, money for rent this summer. I'm looking to run these types of tests. In exchange, I can help out. However, I can run different sessions or things like that. And I would say, 149 said no. And some of them even said, this is illegal. You're not 60 years old or greater. You're not allowed to live in this
Oh,
retirement.
really?
Yeah, I didn't
Wow,
know that that was a rule.
interesting.
Yeah, but apparently something exists along those lines. But anyway, kept going, right? Because you've got that spirit of just, nothing's going to bring me down. Let's keep figuring it out. And one of them said yes. And he said, we've got this extra room. You'll have to move out a few of the days because that's when actually seniors will come and they'll test it out if they want to live at the home. But aside from that, you guys can live there. We've got one queen bed. You can share it. And you can have, free food if you don't eat with each other. You have to eat with different senior citizens every meal. And so we were like, right on, we're moving in. So we showed up and all of our classmates were, like on Wall Street doing investment banking. And we were, eating these meals with seniors. At 5 p.m., we were having dinner and we were hearing these crazy stories and just engaging with folks. And we were dealing blackjack and we were, teaching all of these different improv sessions that we had made up as well and just having an absolute blast. But long story short, we ended up really testing that idea and getting in and running these pilots. And while we found that it was this really magical exchange, at the end of the day for the students, they were going to have so much student debt that it just didn't matter how much they could have earned on our platform. It was just insurmountable. And so we really pivoted around the student debt piece. And my co-founder, Will, he's our technical co-founder, he was previously at Google, and Deirdre and myself all had a ton of student debt. I'd say together we all had more than $200,000 worth of student loans. And so it just made sense for us to instead really focus on what was the pain as opposed to a vitamin that we could be solving.
So in terms of, the actual product, tell us a little bit more about that. Who's ultimately the target, and tell us a little bit more about the specific product that you guys are building.
Yeah, so at Rightfoot, we build smarter pipes for debt. And so what that means is we are streamlining all of the debt management and repayment functionality. And that's fully embeddable technology, so through APIs, that different developers can just embed this technology as a feature of their applications. So we sell into companies, for example, we sell into, we have a top 3 brokerage firm who's our client. So they've got more than 80 million customer accounts. We sell into fintechs and financial institutions, so banks as well as neobanks. We sell into benefits firms who want to offer this tax-free student debt repayment benefit entirely under their brand. Retirement firms. So I don't know if you've seen the new legislation around the Secure 2.0 Act, but that passed December 29th, and it now enables a borrower to make a payment to their student loan and their employer to then make a match into retirement. So all of a sudden, while they pay off their student debt, they can get this, earnings in their retirement fund, which is really awesome. And so those are the types of companies who leverage Rightfoot. So what we're enabling them to do is have this smart debt management and repayment functionality all within that single application view. And the reason why that's important, so the way that I like to think about it is, Todd, if you wanted to get tacos in 20 minutes, you could just DoorDash it and you get your tacos like that, right? But think about your debt, right? So people have multiple different lenders who they work with. They have, even if you have student loans, you could have loans that are private loans, you could have public loans from multiple different providers. You have credit card debt, you have auto loans, you have a mortgage potentially if you're lucky enough for that. And you have to go to 10 different websites to see all of them. There's no way to actually see in one place to understand, well, my interest rates are different. Here's where I should be paying when. What does that even look like? And
You
so
just described what I do basically every month.
Yeah, right. It's a pain. And actually, especially if you look at folks who are living paycheck to paycheck, they are not on auto pay with their debt because they're scared they're going to overdraft with their bank. So what we see in user interviews is folks are actually making calendar invites to themselves and saying, oh, go ahead and make that payment. Don't forget. And of course, what happens is life happens. It gets in the way. You miss your payment, your credit score goes down, and all of a sudden you're in a bad position. So having peace of mind, being able to see and make smart decisions, we're providing the plumbing, and we're not a standalone application, but rather so that you can access this infrastructure within any application that you know and love and use today.
Obviously debt is, a personal story to you. Obviously it is to me and many others. How much of the issue related to debt, and even some of the thinking behind the API that you've built here, goes to kind of this misunderstanding of debt, and are people really fully grasping what they take out, whether it be a student loan or another product, and how complicated that might be?
Yeah. So education is definitely lacking in this space. We have a lot of folks who we've interviewed who have called themselves young and dumb when they took out their debt. So that's sort of a prototype or kind of a group of folks who we have, a persona who we have
Mhm.
um, that we refer to. Like, this is the group who said, when I was younger, I made these decisions. I didn't know what I was doing. And here's what happened. And when we look at people today, the types of, payments that they're making to their debt, it's really not maximizing their ROI. So a lot of people who say, oh, I'm on auto pay today. So we do a lot of interviews to just be in touch with that customer. And people tell us, yeah, I'm on auto pay. And we dig further and we realize that they're actually not on the full auto pay. They're auto paying for the minimum on their credit card, for example.
Yeah.
And of course, you don't want to pay the minimum on your credit card if you can avoid it. And so thinking about things like that, how do you educate someone and say, actually, $20 going here would be far more impactful and have a far greater ROI than if you sent $20 here. And so institutions are looking for, how do we combine everything under one roof? Some of our customers, if they're doing investing, they might want to say, well, how do we kind of pull in the full picture and say, invest this much here, but if you have this type of interest rate, make this payment here, make that payment here. This is holistically how to maximize your wealth as an individual.
How much of this burden impacts households? And I know that when doing research for this episode, you mentioned on your website how much of an impact it hits into either disadvantaged or minority communities significantly more than it does either wealthier or communities that are doing a bit better. Kind of how big is that difference between those communities, and how much of a burden is debt on households, especially those that are kind of living closer to the line?
Yeah. So what I can share is some statistics around that. So nearly 9 in 10 Black students take out federal student loans to pay for college. And you can compare this with 7 in 10 white students. So really high numbers on both sides. But ultimately, when you think about you're taking out student debt, that means that you can't invest. You're slower to save for retirement, do all of these things that are wealth building. So it really does have really big kind of wave impacts going down the line. Some other statistics. So Black students are far more likely to be saddled with a larger amount of student debt. So 59.5% of Black students will borrow more than $29,500. That's a lot of money. And when you also think about defaults, so Black borrowers are more than twice as likely as white borrowers to default on their student loans. And in a lot of our research, what we were also seeing is the people who needed the most help were those who did not actually graduate from college. So they were saddled with this student debt, but then they didn't have the degree to show for it to be able to have a higher earning bucket. And so all of this, messy student loan cancellation that we have going on right now, of course, there's a lot of, back and forth, about student loan cancellation. Overall, we're extremely supportive of that legislation and being able to give borrowers the help that they need. And even if Biden were to go ahead and wipe out even more than he said he would, this is still going to be a massive problem, and it's growing at such a fast pace. And when you combine student debt with credit card debt and auto loans and mortgages and all of this other kind of type of debt that's really holding folks back, it's really impactful to think about how you can help bring customers the solutions that they need right at their fingertips.
One bit of clarification before we move to the next question. So say if I'm using a fintech app,
Yeah.
and they're not a client of yours, you guys would have to they would have to contract you as a client before offering it through their app, correct?
Yeah, so maybe it would be helpful if I shared a little bit of background about like how it works at a high level, or why does
Yeah.
Rightfoot even exist. So if you look at all of the lenders and loan servicers across the US, their backends were built in the 1970s on COBOL, which means that they don't have just APIs that developers can simply plug into. It's quite a mess.
Yeah.
And it really hasn't been updated. And so what Rightfoot's done is we've built this modern infrastructure layer that enables us to interact directly with these lenders. So we're sending them funds into their treasury teams. We're giving them instructions about how to actually apply those funds. So, hey, for example, we sent you, $100,000 to your master treasury department. But because loans are not routable accounts like a bank account, there's no account and routing number. That's really hard ordinarily for a lender to even understand, what do I do with that? So, hey, you just sent me all these funds. What do you want me to do? How do I even apply that?
Yeah.
And so what we're giving them is instructions saying, hey, we just sent you $100,000. Take $34.18 and apply it to Todd's loan. And here's his account information. Here's his sub account. Here's his guarantor. Here are all these very specific things that you need to know, lender, in order to apply those funds to his account. And take, $32.18 and apply to this person. And then Rightfoot's doing reconciliation with that provider, and then basically feeding that up in the form of modern APIs to the companies that we work with, so they can digest and understand what's the payment status on this loan, for example. And so the way that companies were doing that before is they're mailing checks to the lenders. And of course, the lenders are like, I don't know if you've ever gone into a lending organization, specifically like in the student loan world. You walk in and there's just like piles and piles of mailed checks, right? They have massive teams who are just going through this, and that's a pain for them. And so coming in and being able to say, let's fix that for you, and also let's make a better experience so that people can overall be helped and have a better grasp on their debt, be able to make seamless payments to their debt, et cetera. So we're essentially replacing check mailing. Of course, there's really old bill pay systems that some companies were using before as well, but they are a black box to developers. They don't have that closed feedback loop, and they don't have direct integrations into that lender. And so we provide an additional layer of transparency that really helps the companies that we work with understand the status of payments to debt.
And how, picking up on a couple of the more technical pieces, how long does it take to, say, integrate with a lender? Because if they are using old technology, you're bringing new technology, kind of what does that match look like?
Yeah. So we try to make it as easy as possible for the lender themselves. So you could think of us as providing the APIs or building it on their side so that they can receive the data and the payments without actually doing any extra work. But of course, working with these providers who were built in the 1970s does take a lot of time, and forging those relationships as well. So I'd say our first integrations end to end probably took about 8 months. And so when you're thinking about how there are thousands of lenders and loan servicers across the US, it's really a big moat to be able to have these relationships and to forge these types of integrations.
Going back to kind of the other aspect of the conversation, and the financial inclusion and financial health portion, how much of a difference can it be to a borrower and just to an individual generally, if they were to use something like you guys are providing versus the either spreadsheet or calendar invites or whatever that ultimately probably don't account for, you should be paying more than the minimum, you should doing this, and they're setting up all these things versus what you guys provide? Like, how much of a difference can that be for them?
Yeah. And even the folks who are doing the spreadsheets are in, I would call them like the healthiest state possible.
Yeah.
And that's such a small group. I'd say like 2% of people are the spreadsheet type group, the one who's like really on top of their debt. Most of the people who we spoke with say, I think about it all the time. I wake up in bed, I check all of my different websites. I'm trying to keep track of it, but it's just like really hard for me to do. So I'm trying to just forget about it. And so ultimately, what we're not trying to do is necessarily go into like educating a borrower and saying, here are the things that you should do for yourself, but really guiding people on their journey. And there's so much flexibility when you have APIs to be able to come in and say, like, what do you want that experience to look like? And a lot of the partners we work with, so banks and financial institutions, will have a lot of relevant data on each person. So they'll be able to really tailor that experience and make it personalized for each person. So ultimately, when you think about the power of being able to help them with their debt, more than 80% of households in the US have consumer debt. So when you don't think about debt and you're just trying to say, oh yeah, you should invest here, you should save for retirement this much, you have no idea if that's right or not. And
Yeah.
so being able to really complement their stack and come in and say, here for the first time is a full view of assets and liabilities together as they should be, then you're able to start working and to start benefiting the borrower holistically.
When hearing you describe it and talk about it generally, the how much has the shift in the fintech market overall towards an embedded type technology helped kind of set the groundwork for what you guys are ultimately providing? I mean, if this was 10 or 15 years ago, I don't know if this would be possible
Totally.
just yet.
Totally. Yeah, I mean, it's all about timing, right? So you're spot on. There are a number of different companies. I'd even say like larger banks who we're in, beginning relationship stages with, who say, hey, our team would have never spoken with you even a year ago, right? Like we're all focused on building everything in-house, everything under our own brand. Like we don't want anyone else helping out. But this idea of them starting to realize and come to the realization that, hey, I'm going to, instead of it taking, 6 months to launch something, it would have taken me 4.5 years. And
Yeah.
instead I could use Rightfoot to get to market fast. All of a sudden the messaging is changing, and it's really about speed to market. So I'm not saying every company is open to those types of partnerships or
Yeah.
relationships, but 100% we're seeing that change. And even, since we started our company, I would say more and more towards that embeddable adoption. How can I leverage different fintech partners? How am I not viewing them as a foe, but actually a friend who will help me get to market with a better comprehensive product in a shorter amount of time?
What's the if not the biggest, then one of the biggest lessons that you've learned since starting Rightfoot?
I think so. Focus is always the number one, lesson to come away with. And I think specifically for us, when we started out, we said, everyone has debt. Here are all the different ways that we can help people. And specifically looking at clients, our first 24 customers were across 4 different verticals. It's like lenders, retirement firms, benefit firms, fintechs, financial institutions, this massive brokerage firm, and these smaller other startups. And so when you think about, lessons or takeaways, if I was doing this again from scratch, what would it look like? I would just focus on one of those groups. I would look at who is the fastest growing sector, what are the possibilities there, and then really narrow in on nailing that versus going much wider. Because the problem is that even though, they're all using our technology in the same way and the APIs are the same, you can't cater to them in a very specific way if you're not only focusing on that. And so as we kind of approach Rightfoot 2.0, that's what we're gearing up to, is very specific solutions in each of the different spaces so that we can deliver the best possible solution and make no excuses about that.
Do you have a biggest regret or a regret that you can share?
So I guess the biggest regret was not having that focus at the beginning. I think, for us, that just meant that we really spread our attention. And we, had to hire different types of roles earlier on. I'd say like I don't know if you've heard of I think it's a 2 pizza rule, which is like, if you have a team where you order 2 pizzas and everyone, you can feed the entire team with just those 2 pizzas, like that's great because you're able to move really quickly. So I think like when you expand the team really early on, like even if you are getting that traction, if you're not specifically focused on one vertical or one type of customer, it really hurts the team because then they're growing at a faster pace and you're trying to figure out how do we all work together and how do you communicate differently. And I think especially in this remote world, so our team is spread across the US, it requires a lot more documentation, a lot more intentional communication to make sure that everyone's on the same page. So another regret is not setting up that documentation and infrastructure to be able to have a remote first workforce.
You mentioned before to the experience you had like going into the retirement home
Mhm.
versus maybe some people that were on Wall Street. I mean, how much, lessons and experience, how much of that experience, you know shaped kind of how you're shaping, ultimately right foot, and do you think it could have been different had you gone that more traditional route of Wall Street and maybe interning at a big bank? Like, how much does that experience really shape what you guys are building?
So I think it shapes what we're building a lot because it all comes down to willingness to pivot and not being in love so much with an idea that you can't see around the corner and understand that you could change it a little bit to make it far more impactful. So our legal name is Charitize Inc. And it's actually a tribute to our original concept or idea, or how we started and launched. And our lawyers keep telling us, why aren't you just changing it legally to Rightfoot? It's so easy. And we're like, listen, this is a part of our DNA. We're fast pivoters. We learn quickly. And so I think, to your questions, like I worked at big companies before, like IBM, and I had a tremendous experience there. But thinking about all of the quick learnings that you can have in launching your own company, there's just nothing to compare to
Yeah.
that. And really figuring out, how do you learn fast? How do you fail fast? How do you make sure that you're not blinded in any way and you're looking around corners and asking the right questions?
One thing that comes to mind, when you hire new people, do you tell them that story and kind of the legal name is this? I mean, I'm sure it gives a different color to a company versus just, hey, we're right foot and this is what we do. That experience kind of, gives you character versus say the maybe the more traditional route.
Definitely. So we're at 19 people now, so it's a nice intimate group.
Yeah.
So the people who come on board are aware of our founding story, how we got started. They're all mission driven and excited about maximizing wealth for underrepresented Americans, specifically first starting out with tackling folks' debt. So you're so right. I think it's the kind of people who are attracted to a company like this, the ones who want to go really early stage. Maybe they've been there before and they're energized by it. Maybe they took a break and then came back for more. But those are the kinds of people that you want to build a company with, who are just so excited about those future pivots and what's in store around the corner.
Obviously, yeah, all companies need capital. When going to investors and talking to investors, kind of how was investment appetite and how do you think of choosing and looking at investment partners and is it just a check? Are you looking for a long-term partner in a relationship? Kind of how do you think of that investment relationship with VCs and other potential investors?
So for us, it's definitely about that relationship. It's about who are the people that we're going to work with that we can show up authentically. So I think that's also a really big piece for us. So having two female founders, understanding that fewer than 2% of funding goes to women, like that's something that's so insane to think about, but it means that the way that you show up could look differently. And we really wanted to make sure that the partners that we choose are behind us and our decisions are aligned to our strategic viewpoints, that we can work with them, that they'll push us to be better. And those are the types of investors that we chose to partner with and are really excited about that. I'd also say when we were raising our seed round previously, we had a really kind of great approach of finding these awesome angels in our space who were relevant to what we were doing. And so we would kind of have this approach where we would have a list of people who are our targets, and then we would go after them, and we would, explain what Rightfoot does and really try to get them on board. And when they would come on board, we would go to, another angel who we really admired and respected, and then say, hey, this other angel's on board. Are you interested in joining this type of community? And we did an investor kickoff for everyone, so they felt like they could all meet each other. And so we had everyone from former COO of Venmo to one of the founders of Plaid to the CRO of Marqeta. So all of these really great folks who were able to bring on board and have as a part of our team. And then actually it was right before Christmas break, I had sent out an investor update, and I included a link for introductions that I'm looking to get. And everyone was just so active in it. And we had, some of our investors were offering up 12 different connections, which is just crazy, that
Wow.
level of activity. And you're able to really leverage their connections because they want you to be successful ultimately. So being able to say, okay, great. It's not just I'm updating them, but it's how can we actually help each other, and how can they help make my company successful?
I mean, you mentioned it when we started talking about, the investment piece about fewer than 2% of, startups run by women are funded. And, when going into the investment process, how is that daunting to look at that and say, wow, do we have a higher bar to reach? And then B, when you start getting those, kind of how do you react to that? And
Yeah.
kind of counter that, because you talked a little bit about the process you had, but beginning the process, did you have reticence? Did you rethink, or kind of what was the mindset going in, knowing some of those daunting statistics?
Yeah, so great question. And also for anyone who's listening, if you're a female founder, if you're an underrepresented founder, if you want to reach out to me and get tips, have me review decks, things like that, I'm happy to help out. But at a high level, 100%. So you do have to approach it differently. You are graded with different criteria, whether or not folks are sort of understanding that that's what they're doing. So the types of questions that you'll be asked will definitely be more around like show me proof points as opposed to tell me the story. And I think especially as we're gearing up for, or already are in, a much tighter funding environment, that means that even more scrutiny is going to be on women and underrepresented founders. And so thinking about the ways that you could set yourself up for success. So that means really leveraging your network, getting introductions or back channels from founders of that portfolio company that you're trying to get in front of. So never reaching out to an investor directly and saying, hey, you want to take my pitch meeting? But really seeing, okay, great. How can I drum up the support? How can I be really succinct with my facts? So growing at this rate, here's how much we have booked. Here's what it will look like in the future. So really going for that future approach. So our sales will cross X by the end of 2023, et cetera. So those are just kind of a few things, but really it does take a lot of time. So making sure that you give yourself that space and are gentle with yourself, because I think oftentimes founders, you get really caught up in the fact that you might view yourself, like your own identity is the same as your company. So if I'm getting a no in fundraising, that means they're telling me, Dani, no, like I don't like Dani. And so I think that's something that's really important for founders to be able to, talk with a therapist about, which is something that I've recently, I recently started doing therapy. I love it. It's so helpful. But fundraising is really difficult in this environment. And so being able to, find the right support system is really important, but also know like there is money out there for great companies, and you will be successful if you're, hitting the right metrics that you set yourself up for. So definitely happy to talk more with folks about that.
We have just a few minutes left, so I'd like to end the episode a bit lighter than we started. Do you have a favorite book or the last book that you read?
So I just finished a book called The Messenger. That was a really interesting book. I love pachinko. Also, Cersei, if you've ever read that one. I really like that. I think some just like fun light books are great. I'm also really into comedy. I think especially as a founder, there's a side of you that just like, wants to just like take on something super light. So TV shows that are fun and uplifting are always great.
You've mentioned focus through the episode. You obviously just mentioned, kind of watching or listening or doing something lighter. I mean, what else do you do to unwind? Obviously, founders work hard. Sometimes they probably overdo it, but ultimately, you can't run a company unless you are clear-headed and focused and energized. Is there anything else you do to unwind and kind of step back a bit?
So last year, I actually started an adult kickball, game, or like basically formed a team, and had a bunch of friends pulled together for that. And so, when you're like 30-year-olds who are just like playing kickball, it's just this wild, hilarious adventure. And so we would go every Wednesday to this field and we'd play against other teams. And it was just a blast. You kind of forget what it means to feel like you're on a sports team and you're high-fiving each other and you're cheering for each other. And that's the same kind of environment that we try to create in the office, but it's really hard to do remotely. Like you
Yeah.
can't just high-five someone. So I feel like people crave that kind of energy. So that was awesome. We'll definitely be doing that again this year. Running, getting out all of the, energy, getting the endorphins going up. Those are some of the things that I really like. I think like being on a actual sports team and having people to high five is something that's really motivating and something that I know I'd been craving before.
Speaking of sports, do you have a favorite team or favorite sport that you watch other than kickball?
Well, I'm from Boston, so I think I have to say Red Sox. I always grew up with everybody just loving the Red Sox. And I live in San Francisco now, so the Warriors are obviously great as well. I love to go to Warrior games whenever I could. What about you?
Well, obviously, you see that I'm wearing a certain sweatshirt here,
Yeah.
the Buffalo Bills, who are playing this weekend in the playoffs. And being from New York, I'm a big Mets fan and college football as well, which is Notre Dame. So,
Nice.
a
Yeah,
couple more questions.
Tulane just won a Cotton Bowl, so I went to Tulane for
Yes,
undergrad,
yes,
and
that
so
was
that
a surprise and
yeah.
quite the win, especially over USC, who Notre Dame fans hate. So that was nice to
Yeah.
see.
Oh, great. I'm glad we could be helpful.
Do you have a favorite vacation spot?
So more recently, this was actually over Christmas break, I decided I really wanted to unplug. So my boyfriend and I went to Maui. So we've got some really cheap flights on Southwest about a year in advance. And then what we realized is there were no Airbnbs and no hotels that were, cheap. And obviously at a founder budget, I was like, what do I do here? Do we have to cancel the trip? And then started researching and found out that you could rent a van and you could actually sleep in the van. And so we ended up renting a van for 6 nights and going around Maui. And we just,
Wow.
had a little mattress in the van and we would open up the back doors and kind of pull into the beach so you could just hear the water behind you. And it was absolutely magical. I'd say just like from living in Southeast Asia for 4 years, going to like Sri Lanka and going to Bali and going to Indonesia, other parts of Indonesia. Mount Bromo was a wonderful trip where we were going up to craters. Absolutely. I mean, I love Vietnam and Thailand. I'll never stop traveling whenever I can. I absolutely love it.
Yeah, it's funny. Not many types of people would figure that out in terms of the van. Uh, I think founders, though, are different, are made from a different cloth because hearing you talk about it, even the story before about the founding story with the retirement home and everything. I mean, founders that I've talked to, they just think differently. They
Mm.
tend to not do, all right, I'll watch football every weekend or something like that. I had one founder who said he plays underwater hockey, which I didn't know
Whoa.
existed. So there's just this different mindset, which I find fascinating when talking to founders.
That's
Um,
awesome.
we have one final question, which is, what do you find inspiring? What inspires you?
People. I find people inspiring. I find traveling inspiring. So when I lived in Southeast Asia for 4 years, I got to go to so many different countries and just see so many different ways of life. And I think it was like, it's really hard to not feel like you're stuck inside a bubble. I think especially like as a founder in Silicon Valley, you kind of forget what the world is like. And so I think the way personally to do that is by traveling, but in super scrappy ways, like we're just talking about. So like doing a homestay, for example. So I did that in Laos. I stayed on like a farm with goats. And so like these kinds of things where you just really get to know people and get outside of the zone, and people let their guard down and they're talking to you about everyday life, and you're thinking like, wow, our lives are so different, but they're actually pretty similar. And
Yep.
here's the way that we're similar. And ultimately, the world is big, but it's also very small at the same time. So I think remembering that and staying down to earth, those are the things that I find inspiring.
Well, Dani, I appreciate you giving me a few minutes and coming on the show. If someone wanted to reach out either about some of the founder tips that we were talking about before, or wanted to get in touch with Rightfoot, how would they do that? How can they reach out?
Yeah, so you can go ahead and friend me on LinkedIn. It's just Danielle Pensack, or feel free to drop me a note at Danielle@rightfoot.com.
Well, thank you very much. Continued success to you and the team, and hopefully we'll get you back sometime in the future.
Thanks, Todd. Appreciate it.
Thank you.